Examination round the corner. There are certain mistakes what your dear friends who wrote the exam in the month of May 2025 did, which I don't want all of you to do when you give your examination in September 2025 or onwards. And these are not the mistakes that I have found which I'm screaming about. These are the mistakes what your evaluators found, or what we call as examiners found, which they've given as a detailed set of comments for us to learn from. This is available on the suggested answer tab on your ICA website under BOS Knowledge Portal. This is usually also published in our student journal, but this is something that people usually ignore. Life is too short to make our own mistakes. Let's learn from the mistakes of others. Examiners' comments on the performance of the examinees, as in students. In the first question, this is only the descriptive part. This is not related anyway to the MCQ part. In the first question, 1A, that was on Accounting Standard 10 Property, Plant and Equipment. They say that significant number of examinees displayed lack of understanding on the provisions of Accounting Standard 10. Instead of applying correct provisions, many examinees incorrectly based their responses on A16 borrowing cost, especially while commenting on the capitalization of expenses related to relocation of production facilities. Whenever production facilities are relocated from one place to another, that adds no value to the cost of the asset. Such production facilities should have been charged to PL, and we should have not added them. We should have not included them in the cost of the asset. But a lot of them have incorrectly included into the cost of the asset. This is the answer to our question number 1A of May 2025 exam. See, cost incurred on improving the production facility or temporary movement should not have been included in the cost. So a lot of students have incorrectly taken it into the cost, because of which their total cost has increased and it's become wrong. And that's what the evaluator is telling us, that a lot of them have done this mistake. So also focus on these small pointers in AS10 as to what costs are included in the cost of the asset and what are not. And additionally, several examinees were unable to accurately compute the cost of land. So that's become the value. So whenever you take this total part, no, this 20, oh my god, I think they've incorrectly taken this 250 hectares into rupees 25,000 per hectare, and you're trying to find 62 lakh 50. Examiners are saying that a lot of them have done that inaccurately. And maybe with regard to stamp duty also, we're supposed to charge it as 5% on 62 lakh 50. Majority of them have been doing that incorrectly as given by the examiner. Looks to be a simple question, but as per their comment, majority of them have wrong. Let's see 1B, what exactly is the comment by the evaluator. Few examinees were not able to determine the correct value of investment as on 31st of March 2025. Furthermore, the calculation of profit on sale of the share was often incorrect. 1B was a question on investment accounting. When we did this, they failed to compute the cost correctly. That's what they told. No, determine the correct value of investment on 31st March. 31st March as in the closing balance. On the closing balance, no, we find 238,455. This is the correct answer. So in this competition, people have done it wrong. So how can you go wrong in this? I don't know how can you go wrong. I'll tell you how can you get right. What you'd have to do is keep in mind whether the flow is average cost or first in first out. Once you get this right, average cost or first in first out, keep adding the units that you buy, keep deducting the units that you sell, and also consider the amounts. And this is how you do it right. Closing balance. See, opening balance is 20,000 shares. You add 4,000 and 9,000 shares which were bought during the year, and you identify the total cost for the total units opening plus purchase. At the end of the period, we have 21,500 units. Just cross multiply to identify what is the value of the units that is there at the end of the year. Because this is average cost, we don't have to take units sold individually. It will get averaged out anyways. And this is the right way of computing the cost of investments. Anyways, in the question, they have not given us fair value, but I did mention, irrespective of the fact whether they give the fair value or they don't give the fair value, always do show the fair value and then tell as per accounting standard 13, because the investment is current investment, it has to be valued at cost or fair market value, whichever is less. In this case, because fair market value is not available, value taken is cost only of 238,455, and it's been told that majority of them have got this 238,455 wrong. Maybe because they've got the bonus part wrong, or right issue wrong, or final dividend amount wrong. Maybe. I can only guess. Furthermore, the calculation of profit on sale of shares was often incorrect. So whenever you make sale of investments, individually you need to identify the cost, exactly like how we did for that closing units. Opening plus purchase till the date of sale, and identify the total cost of those units and keep the total units handy. Number of units sold, just do cross multiplication to identify the cost. And later we compare this with the selling price to identify the profit or loss on the sale of such investment. It's been seen that majority of them have got this aspect also wrong. There was only one sale in this question. If in case you are finding this too fast, I've shared detailed solution to this, and the link of that will be in the description. You can watch the detailed solution for any of the questions that you're finding it tricky. And that's it. That's with regard to 1A, 1B. There's a comment on question number 2. The comment on question number 2 says that many examinees were unable to classify items correctly in the balance sheet as per Schedule 3 format prescribed under Companies Act. What exactly was it wrong? Maybe some items they've written in the balance sheet but under the incorrect heading. When you write the item under incorrect heading for a question on financial statements which is based out on Schedule 3, don't expect full marks. You will lose out on marks for wrong placement of items in Schedule 3. Key adjustments such as preliminary expenses and profit on reissue of shares were often missed. The preliminary expenses would be appearing in the trial balance as a debit item, but it cannot appear as a balance sheet asset. This should have been written off in the very first year, because if you have to write it as an asset, where do you write in the balance sheet? There's no place. As per Accounting Standard 26, this is not considered as an intangible asset. So entire preliminary expenses has to be written as a negative item under reserves and surplus in the very first year of incorporation. We don't know the previous year, so we do it right now. Same profit on reissue of shares also, there is a similar adjustment. Let's see 2A, isn't it? 2A. See, profit on reissue of forfeited shares was supposed to be deducted from P&L, and preliminary expenses also was supposed to be deducted from P&L. So this was the adjustment. If in case you would want to see this computation in detail, anyways, you can go watch question number 2A's detailed solution. The link is in the description, like I mentioned. Question 2, not 2A. That's the treatment. Many of them have got this part wrong, is what the evaluator is saying. Then common error, omission of number of shares in notes to accounts. Okay, this is one thing that I've noticed also during class. Lot of you people, what you do is, whenever you do notes to accounts for share capital, you end up straight away writing 6 lakh, 3 lakh, 9 lakh. Who would write this description? 6,000 shares of rupees 100 each. Who would write this? 3,000 shares of rupees 100 each. This is mandatory. If you just write equity share capital 6 lakh, if you just write preference share capital 3 lakh, don't expect full marks. That's what they're telling. They're telling a lot of students have not written number of shares data, because if you come to Schedule 3 disclosure requirement, this entire chapter is there, no 10th one. It is based on disclosures. You can't take disclosures lightly. Chapter 11.1. This is from our class notes. See, an important disclosure requirement is you need to say what type of share, what class of share, what nominal value, how much of it is issued, how much is subscribed, how much is called up, how much is paid up. Number of shares has to be mentioned. Denomination of the shares is a mandatory disclosure. Skipping that is like skipping the marks in the exam. Then only a few examinees prepared notes in the prescribed manner. Rest of them have done notes to accounts like however they want. You are not supposed to. Notes to accounts is part of financial statements, and there's a specific order in which you have to do, and you have to follow that. Can't take that lightly. Let's see question 3A. What is their comment? Several examinees made mistake in calculating income taxes. I'll tell you honestly, this was not an easy question. There was a deferred tax based adjustment. You might have done deferred tax in Accounting Standard 22. You might have done cash flow statement separately, but you might have never usually come across a question which is having deferred tax concept tested with Accounting Standard 3. Anyways, when we did AS22, I did tell you what is the accounting entry, what is the payment, how much of the cash account has to be credited, how does it deal with provision for tax. With that knowledge, this was very much doable. All you had to do in this question is to draw provision for tax ledger, use your Accounting Standard 22 knowledge, and then also draw deferred tax liability ledger, and then show up as to how will this ledger impact, how will this ledger, how much of it will be the tax amount to be adjusted under operating activities. If in case you would have cracked this, would have got an extra cookie, because I don't think many of them would have got this right. So as an evaluator, if I'm correcting a paper and I get 10 consecutive papers wrong when it comes to deferred tax adjustment, and I suddenly see one paper wherein one student has done it right, I would still give that cookie to the student and then think that he would have got other things also very much right. So again, this is a new one, but it's not impossible to do. Very much comfortably doable one. Because when we did our topic of accounting standard 22, we didn't just do solution to that question that was there. So we extended it slightly further, and for each question we went on to see what is the accounting entries that we can pass, how will that be impacted in financial statements, P&L statement, how would this deferred tax be impacting, balance sheet, how would this deferred tax be impacting. This is what we did for every question when we did deferred tax treatments in AS22. So when you do this much in detail, when you know how would it be in PL, how would it be in balance sheet, identifying that presentation in cash flow statement was not tricky. You would be very comfortably able to draw the ledger. Then let's see what is the next remark after question 3a. Showed lack of clarity on treatment of deferred tax liability. Errors were observed in computing acquisition of property, plant and equipment. This is where you can't do mistake. Tax is still okay. That is little tricky. But property, plant and equipment acquisition in 3a, what was that? 3a PP. Furniture and fixture. Okay, you're supposed to identify the purchase of an asset as balancing figure. You're supposed to prepare a ledger for furniture and fixture, that is PPE. Opening balance was given in the question. Closing balance was given in the question. Depreciation was given in P&L. You were supposed to write that. There was adjustment given for sale. So in the furniture ledger, you would have to write cost of the furniture on the credit. How do you write that? You write sale price on the credit. You write the profit on sale on the debit, and that's how you find purchase of an asset as balancing figure. So I think many of them might have skipped preparing the ledger, tried to identify the purchase of an asset just like that plus minus, and when you try to skip and then find a shortcut, then it might force you to write an exam all again, because you might lose marks. So as we've discussed in the past in the class, humble request is whenever there is adjustment on an asset, please open ledger. When the opening balance closing balance is not matching, please open a ledger to identify this purchase. If you remember, we've done some cute little questions on this on PP. I think the last set of questions on our cash flow statement, if you observe, see at the end we did some questions like original cost of the asset is this much, accumulated depreciation is this, sale price in 3 different cases. You were supposed to prepare journal and then identify what would have been the purchase value of the asset. So this would have covered that part right. Then let's see what else is there after this 3a, which led to incorrect preparation of cash flow in accordance with AS3 for the year ended 31st of March. That's the examiner's comment on cash flow statement question. Let's see 3b. Most examinees exhibited inadequate knowledge of AS25 interim financial reporting. They failed to calculate adjusted profit before tax for the third quarter. This is a cakewalk question. Exact same question is there in ICS study material. Exact same question was there in one of the RTPs, and exact same question we have done in class also several times. In AS25 question, we had to take that period's expense in that quarter. We should neither defer nor amortize, but some items were incorrectly deferred or amortized. We were supposed to adjust them, add back incorrect expense deducted, add correct income which is not taken to find the rectified profit. This was maybe taken incorrectly by many students. This is AS25 question. You can find the link to the complete description and the complete discussion of the answer each item wise. Then you can check that out. But this is the correct answer what you should have done. Let's see the comment on question 4. Question 4, majority of the examinees were unable to correctly compute the purchase consideration as per AS14. What was this on PC? This purchase consideration was under payment method. Hey, payment method. Full details were actually given in the question only, PC. They told 27 rupees per share. They told 100 rupees these many shares. So all you have to do is just multiply and then take the total. Was there any adjustment on this? I don't think there was adjustment for purchase consideration. Purchase consideration in this exam question was a cakewalk. They're just literally given all the details. It's not NATO, it's not intrinsic value, but have to read this. Many failed to pass correct journal entries in the book of Pickles Limited. Pickles Limited was Pickles Limited was transferor company, the company which is winding up. You had to transfer all the assets to realization, all the liabilities to realization, whether taken over or not at book value, close the box, give it to transferee, then take PC from them. Then for assets not taken over, liabilities not taken over, we had to write the sale entry for assets, settlement entry for liabilities, but sale entry will be at 0 rupees if nothing is mentioned. Settlement entry will be at book value considering conservatism principle, then realization expense, after the settlement of PC to preference shareholders, then realization profit or loss, finally settlement of PC to equity shareholders. I think this question had quite a lot of adjustments. So realization entry, then transfer of liabilities, PC due, receipt of PC, then realization expense was paid. No, not realization expense. Okay, this is that asset not taken over sold, and certain liabilities not taken over paid, that was also there, and realization expense was paid by the transferor company, and some part of the realization expense paid by transferor was actually reimbursed by transferee also. That was also an additional adjustment. Then preference shareholder settlement, after that realization profit or loss, then equity shareholders final settlement. Doable. All the adjustments have been covered. If you can recall the story that we learned, the order, everything will sit exactly the same. But usually in the study material, you don't have many questions on which asset not taken over sold, liabilities not taken over settled, realization expense paid and reimbursed. All of them have come together like Avengers someone. But if you know the entire adjustment story, then this was doable. Then some wrongly used revaluation account instead of realization. Wow, wow. Maybe they were too inspired by the concept of partnership. They've still not got that hangover of admission, retirement, death in foundation. So instead of doing realization, they've done revaluation. See, in the books of transfer, we follow realization approach. Books of accounts has to be closed. They've incorrectly done revaluation. Oh my God. There were also frequent errors in recording sale of furniture fixtures. Sale of furniture fixtures, asset not taken over by transferor. Sorry, asset not taken over by transferee, sold by transferor. We have to write simple journal entry, bank to realization. That's it. Not at book value. We should not try to write bank account debit selling price, asset account credit book value, identify profit or loss. That's the mistake a lot of them have done, because maybe they are not aware of the differential treatment for sale of assets in realization approach. What is it that we should do? Irrespective of the cost, irrespective of the profit or loss on sale, we had to write the entry at sale price. Maybe that's one mistake that majority of the students have done. Then mistakes were commonly observed in figures relating to retirement gratuity fund. Some employees, if they retire, you had to pay them some money. That fund was maintained. No, because the company is winding up, you might have to pay that. That liability was not taken over by transferee. Transferor had to pay. You had to again write it at the amount paid. That will be transferred to realization and the amount paid. Suggested answer, I don't think they've given answer like this. Suggested answer, what they've done is they've not transferred to realization. They've kept that ledger open and they've paid. Balance they've transferred to realization as profit or loss. Anyways, if you transfer full amount and then do like how we do, you'll get the same answer. That's absolutely correct. You'll still get the same answer. Then investment in share allotment entries. Okay, they've done error in investment in shares allotment, meaning post amalgamation. In the books of transferee, we give PC, no? Liquidators of transferor account debit to equity shares. I think I'll show it to you. Oh, no, not here. They've told only transferors books. Maybe here allocating equity shares to equity shareholders, in that this entry they've done it wrong. Maybe in journal entry stage, here they've done it wrong as per the comment given by examiner. Consequently, several examinees failed to prepare realization account and cash account. You had to prepare ledger account. They haven't prepared, and that's the reason many of them have lost mark. Oops. That's the fourth one. 5A. Most examinees lacked familiarity with prescribed Schedule 3 format for consolidated PL. Like I mentioned the other day when you're doing consolidation also. Consolidation as a chapter will have consolidation of balance sheet as well as PL. There are so many concepts, so many adjustments, so many questions on consolidated balance sheet that by the time you finish complete consolidated balance sheet, you become so saturated to take consolidation P&L very lightly. But in the exam, they asked question on consolidated PL. That itself was a bouncer to many, and then have not presented consolidated PL clearly. So consolidated PL was again not very off the hook question, a pretty easy straightforward question. There were adjustments on other income, so that intercompany transactions was there. It was supposed to be eliminated from rental income of one company, rental expense of the other. There was dividend income, post acquisition income, that adjustment, and there was some selling and distribution expenditure adjustment. And was there any, okay, there was unrealized profit also, which we eliminated from the closing stock of the other company. No, there is no adjustment on URP. There is no adjustment on URP. There is only intercompany transaction for selling and distribution expense along with rental expense. Only two things. One company has paid rent to another company. So what would happen? This company would have booked in expense, this company would have booked in income. That is right when they are two different companies. When you consolidate them into one, you would have to eliminate it from expense of one entity and income of the other entity. And that's it. There are only two adjustments. It was a very easy and good doing question. No? And there was one dividend adjustment also, not to forget. In this, what happened is at the end, I think now I get it, where majority of them would have got wrong. At the end of the consolidated PL, we were supposed to identify minority share in the consolidated PL. To do this, they have not given the standalone P&L of subsidiary. As a working note, we were supposed to prepare a separate standalone P&L of the Rooster Limited, identify the profit of subsidiary without making any consolidation based adjustments. On this 4,54,000, we were supposed to identify the percentage of minority, and that was supposed to be deducted in our consolidated PL to find the profit to be transferred to transferee company, sorry, not transferee, holding company's balance sheet. That's with regard to this one. Again, detailed solution to this, I've pinned the link in the description. You can watch that complete solution. We have last three comments coming up. 5A, most examinees lack the, okay, that's the 5A consolidation part. 5B, many examinees were unable to compute goodwill or capital reserve as on the date of acquisition. So this again consolidation question. For cost of control, we had to take the nominal value of investment, book value of investment. From the book value, adjust the pre-acquisition reserve, and then identify that goodwill or capital reserve. There are about 2-3 cases based on which the question was given, and this again students have got wrong, that they found it difficult to identify the dividend part, how much of it is pre, how much of it is post. When the dividend is given by the subsidiary to holding, we need to check what profit is the subsidiary using to declare that dividend. If the subsidiary uses the pre-acquisition dividend to declare such dividend, that dividend what is received by the holding should be adjusted against this cost of investments. If it is declared out of the post-acquisition profit, then the holding company has to take that to their P&L. So maybe that part they've got it wrong. You must have, you must recall, be doing a question on this dividend part, and we'd written a detailed note also on this, the treatment of dividend. In point 1, when we do consolidation, we've discussed in large the treatment of dividend. See, once again, dividend investment cost. See here, we would have to adjust the pre-acquisition dividend. Let me show the question only. Dividend. Wrong treatment of dividend. AQ14. In our 14th question, when we discussed, we did mention how to deal with dividend. Here, when the subsidiary company declared the dividend, holding company had incorrectly taken to P&L. In this question, we were supposed to rectify. In there, they had asked us to find the computation of goodwill or capital reserve. Many of them, instead of deducting that pre-acquisition dividend from book value of investments, might have ignored it, and that's where their goodwill or capital reserve would become incorrect. 6A, few examinees could not clearly explain the objectives of accounting standards and advantages of setting accounting standards. We take theory very lightly. In chapter 1, we have a clear question which talks about objectives of accounting standards. What is the objective of accounting standards? Accounting standards are issued in order to bring reliability, in order to increase the comparability of the accounting standards. Once again, accounting standards are issued with an objective of building reliability of benefits of ACE here. Standardization of accounting treatments, fulfilling the requirements of additional disclosures, bringing comparability, reliability, standardization, uniformity. This is the answer. One small part they had asked, and many of them have not clearly written the answer. And advantages of accounting standards. What are the advantages of bringing accounting standards? Same thing. It is to bring in that reliability, trustworthiness, then comparability, uniformity, standardization, complying with law, additional disclosures. Not many have written. 6b, many examinees were unfamiliar with three conditions for declaring dividend from accumulated profits. This section 123, your Companies Act 2013, you would have read this in law as well as in accounts. Whenever there is insufficient profits and you would have to declare dividend, you would have to keep in mind certain things. The rate of dividend cannot exceed the average of the last 3 years, and the money that you withdraw for the purpose of dividend cannot be more than 10% of paid up capital plus free reserves. And the last condition is, after you take that previous year's reserves, minimum 15% of the paid up capital should be still there. So this question is from financial statements topic, this exact part. Rate of dividend cannot exceed average of last 3 years. Amount of dividend should be less than or equal to 1/10 of paid up capital plus free reserves after deducting current year loss anyways. And balance in reserves after utilizing it should be 15% of paid up capital. We had done questions also on this at the end. I'll show it to you. This is AQ. Anyways, the regular class notes is anyways there. See, these were the questions that we did average. On the average, we did one question. On identifying that 10% of PUC plus free reserves, we did one cute question. Then leaving that 15% of the profit behind, we did one question. Yeah, there were a couple of exam questions also in the past which we have solved. They're saying that many of them have got this wrong. They failed to compute the dividend amount correctly. Some incorrectly considered revaluation reserve as free reserves. Oh God, revaluation reserve is not free reserve. We've done this in buyback chapter also. It is there in financial statements also. It is there in dividend also. Free reserve is such reserve which can be utilized for the purpose of declaration of dividend. You can use general reserve and P&L. You cannot use revaluation reserve. You cannot use capital reserve. Which led to wrong calculations of available profits, post withdrawal reserve balance. As a result, they could not determine the permissible withdrawal as per general reserves under the declaration and payment of dividend rules 2014. Last one, 6C. In branch accounting question, some examinees mistakenly prepared trading and P&L account using cost price. We were supposed to write invoice price and then we were supposed to eliminate the load amount on that to find the cost price. Some of them have straight away written the cost price and that's become an error. Instead of invoice price at which the goods were sent to branch, this error led to incorrect stock valuation and computation of branch profit. So these are the errors people have done who wrote the examination in the month of May 2025. In the September 2025 examination, I hope you won't do these kind of an errors. And when after the suggested answers examiners give these comments, I hope not to see these kind of errors, or I hope not to see you doing such an error in the examination. Let's learn from the mistakes that people have done in the past. Let's do really well and hoping for really nice result of all of you people in the upcoming examination. See you all in the next one. Till then, stay in the game.